Welcome back to Family Law Jersey Style. We are here with our special guest, Andrew Lisicky, a shareholder and certified public accountant of Buckno Lisicky with various locations. So I wanted to welcome you, Andrew. Thank you for being here.
My pleasure.
Can you tell us, for parents, what do they need to know about the dependency exemption?
The dependency exemption for federal income tax purposes is a $3,900 deduction off of taxable income. So on federal, it's $3,900 per qualifying child. So if you have one kid, it's $3,900 that would come off of your taxable income. For New Jersey allows a $1,500 deduction off of taxable income.
Okay, thank you. So when parents are separated, for instance, what do they need to know about, for instance, head of household?
Head of household is something that most of divorced couples need to come to grips with. Yeah. Hey, you're not going to get all the benefits that you may have had at married filing joint, but you're not going to be as negatively impacted as if you're filing as single. So it's kind of in between both. The household in which there are dependent children living there.
If couples are getting toward the end of the year and they're contemplating finalizing the relationship, if you will, what should they do? Should they finalize it toward the end of the year, or would they benefit financially from waiting until January, for instance, so that they can capture the joint filing for the prior year?
Well, every situation is different. And to answer your question, it would be dependent upon certain income levels that you would have there. But if I was going to make a general statement, in most cases, it makes more sense to file that final tax return as married filing joint.
So can you explain whether or not alimony and child support are taxable items, or if in fact they're tax deductible, and how so, please?
Okay, so the payor of alimony and child support will get a deduction for the amount allocated to alimony, will not get a deduction for the amount allocated to child support. On the flip side, the person receiving the money will have to pay tax on the alimony portion of the monthly amount that you're receiving, but will not have to pay tax on the child support portion of that.
So essentially the person who's receiving alimony gets charged income taxes on that money. I see, for instance, that a lot of couples who are settling their final divorce matters like to, in their agreements, alternate the deductions, or alternatively split. If they have two children, one takes the exemption, one doesn't take the exemption. Is there a preference?
I'll first say that it's something that needs to be identified, I think, in the final divorce decree. How are the dependents, the qualifying children, going to be split? That's important. Sometimes it slips through the cracks and it's not identified.
What would happen, if, for instance, if both parents tried to take the exemption for the same child?
The IRS would first recognize the first return that was presented to them in a filing. That might not be the actual case as far as who's providing more of the support.
So essentially, if a person is diligent in filing their taxes and the final divorce agreement is silent as to that issue, they might actually get the financial benefit.
Well, the IRS tries to stay out of these disagreements. Right. And they're going to go back and say, hey, you picked up your child on your return, but your former spouse also picked up your child on their return. And there's going to be one parent may be getting some money back, the other one may have to pay some money because of this, and they're going to have to work that out. When you're going through a divorce, you have a divorce attorney, but there are tax aspects that need to be considered. And if you don't really spell out what those tax aspects are, you don't want to be faced, April, and that's the first time you realize that the $40,000 you received in alimony might cost you $10,000 or $15,000 in taxes. So you should really go in with your eyes wide open.
Now, just a personal question. So let's say you're representing a couple while they're filing their joint returns during their relationship. And then they come to you and they say, listen, we're getting divorced. Can you continue to handle the financial aspects and the filing of the tax returns and giving each of them tax advice?
I don't like doing that. I think it's a conflict of interest. I think it's a personal ethics violation.
Okay.
I have run into some instances where they both know it. And they both accept it.
Okay.
So I think if you're above board and you explain the circumstance to both of them, in many instances it's pretty cut and dry. This is what the alimony is, and I can be the resource to explain what the tax cost is of that.
A good practice tip for attorneys, and a good point for litigants or parties to be mindful of, essentially, is that during their negotiations and during the settlement drafting of those documents, they should consider maybe putting in a Plan B alternative.
That's the language that should be there, and that may have gotten pushed to the wayside these past couple of years when the personal exemption phase out wasn't in place. But now it's back, so there's probably 4 or 5 years in which it was gone. So you should probably revisit that.
All right, absolutely, and you should definitely talk to your accountants. That's absolutely certain. Well, you're the expert, so we know they're going to be fighting over you as opposed to having to
go somewhere else. Yeah.
So that's for sure.
You're very kind.
But I appreciate it. Thank you very much for taking the time and coming and visiting with us and answering all of these questions today. It's been a pleasure having you.
You're welcome.
Thank you.
Thanks.